ACC is down by about 1.5% as well. Varun Goel from KC Securities is joining in on this leg of the show. Varun, afternoon. Any thoughts on cement, JP Associates, ACC and the likes?
Good afternoon, Rahul. I think the kind of excitement that we have seen on cement stocks in the last couple of weeks probably seems to be unjustified at this point of time. I think there was a rise of around 20 to 30 rupees a bag in certain parts of the country. But I think if you look at the broader market, especially demand from western and northern part of the country continues to be weak. We have not seen any signs of any hike in terms of prices coming in. Already the new capacity of around 30 million tons has been commissioned this year, and we would expect another 20 million tons to be commissioned in the next 5 months of the fiscal. So overall, I think the capacity utilization of various cement companies would stay weak for the remaining parts of the year. Then 2012 itself, we are seeing around another 40 to 50 million tons of new capacity coming in. So net-net, we would continue to be negative on the cement space as a whole.
All right, let's go back across to Priyal. In news or buzzing around or calls coming in, IFCI, Shri Ashtavinayak has of course been in focus now for some time. What's your call on that particular counter now of late? SR Oil also very much in news. Have you been tracking any of these?
I think as far as the movie production and distribution business is concerned, this business tends to be very volatile. Of course, with every big hit that any studio comes up with, there is a huge increase in the profits for that particular quarter. But one never really knows what's going to happen for the remaining quarters. For all we know, this profit could disappear in the coming quarters. So I think that is a very difficult business to predict or to have a full valuation model on. So we tend to stay away from those companies.
How are you reading Nifty at this point, Varun?
I think Rahul, we're trading close to 15 times of our 12 earnings. Purely on a fundamental basis, I don't see too much upside from these levels. Of course, we've seen almost $4 billion of inflows coming in, and it's very difficult to take a guess as to how long that continues. Of course, the renewed circulation of thoughts about new round of quantitative easing by Fed in US is definitely leading to a lot of money coming in across the world. But I think from an Indian market perspective, it is very important to see what kind of earnings number that we're going to see for quarterly second quarter results, which begin in another 2 weeks. So I think markets will find it very difficult to move on from these levels unless earnings surprise on the positive.
All right, few more voices also coming in on the Nifty. Let's take a look at what market men are saying. Rajat Bose, Amrish Pariga, Anil Magnani, here are their views. And Anil Magnani is talking about a possible 100-point or so pullback, but we will get you those views shortly on the show. Right now, let's go back across to Varun. Varun, at this point of time, would you actually be advocating a buy, or would you say for the next few weeks at least, while markets kind of consolidate at these levels, perhaps remain cautious, stay away?
I think there are selective stories which are still available in the market. The companies where we would expect the earnings growth to be strong. There are selective names in the infrastructure names. I think that segment clearly has not really performed for the last more than a year now, and we would expect the earnings to catch up for the remaining part of the year. The kind of data that we are getting from the ground, from infrastructure lending companies and people who are supplier to various BOT players, that data seems to be very encouraging. So we would expect that sector to continue to do well. Selectively, names in banking space and selectively names in pharma sector still look good, but I think for most of the larger cap names, I don't see a lot of upside from these levels.
Right, talking about banks, Varun, you're saying they're still looking good, but after the run-up that we've seen, particularly in the heavyweights like an ICICI, SBI, HDFC Bank, you're still saying that one could consider them at these levels?
I think one has to be very selective from these levels. I think what is important to take care in the banking sector is that the kind of companies which are expected to have a very good growth in terms of balance sheet, and second, the quality of balance sheet. I think a lot of PSU banks we would expect, especially in the March quarter, to show a lot of NPAs. I think for some reasons that has not really come out so far, although those assets have been restructured and they still have not come out of that. So I think selectively only in the private sector names, both in mid cap and large cap names, there are still stocks that one can buy, but the criteria should be quality of balance sheets and of course good growth going forward.
Okay, lots of strategy reports coming.
The JP Associates and ABB, Suzlon, would they also be on your buy list at this point?
I think as far as the cement names are concerned, as I mentioned, we're completely avoiding this point of time. As far as the alternate energy space is concerned, there was a lot of excitement in, I think, the last cycle, wind and solar and biothermal was supposed to be the next, big exciting stories. I think as far as India is concerned, we have completely lost the competitive advantage that we had. China is clearly able to manufacture, various alternate energy equipments, be it wind rotor blades or being solar panels and all that at a much cheaper cost as compared to the cost that we have in India. And of course, with the recession coming in, the kind of money that was being coming in alternate energy projects in Europe and America has also kind of dried up. So we would tend to be very cautious on that space, at least in the short term, although overall, as long as the theme of climate change and all continues to be a serious concern for all of us, I think longer term, we still see growth prospects, but I think till the time we are able to evolve into a much better competitive positioning for Indian companies, these companies might continue to struggle.
Well, let's extend that question then, I guess, maybe to infrastructure. Varun, you've got a Meta's Infra that's up and about by about 5.5%. J. Kumar Infra is up by about 5.5%. You've got some smaller names like a Suprajit Engineering, CNC Constructions, Horizon Infra. A lot of these stocks, B.I. Kashyap, are up between 5 and 15%. And then you've got a Punj Lloyd also that's fitting into that bracket. Anything that you're recommending to clients, large cap, mid cap, small cap infra at this point?
I think definitely, some of the large cap infrastructure and construction companies should do well. I think the earnings have been quite muted in the last, 3 to 4 quarters, and you would expect, the robust order book that these people have to reflect in the earnings going forward. However, I would think that one needs to be careful with the quality of names that one is buying at this point of time, because what the news that we get from the ground is that while the bigger names are clearly got the new orders and they are able to execute, some of the smaller and these mid-level companies are still struggling when it comes to execution, and of course getting the payments in time and dealing with the working capital issues. I think of course in this kind of a rally, all kind of names tend to go up, but one would tend to be cautious in terms of what stocks we are buying, and we are definitely positive on some of the larger names in the space.
All right, well, the Nifty.
You are still with the countdown. We are 13 points shy of 6,000 on the Nifty, which is a retracement of about 40 points on the day's low. But yet, if you want to look at it as a pessimist, we are off about, 37 and 17, about 54 points from the day's high. So it's locked in the middle of nowhere at this point in time as a Nifty. Varun Goel has been with us. Varun, it's been a sharp day of underperformance for the oil and gas sector also. You've got Kane suffering, Reliance has been a bit of an underperformer. Upstream and downstream, buying anything at this point?
I think yesterday itself we saw a small hike in petrol prices, which gives us the confidence that the reforms that were initiated are very much on track. We would tend to believe that once the Bihar elections are out of the way, there will be a small window which would be available for deregulation of the diesel prices. I think if and when we see deregulation on the diesel side, there will be clearly a case for further re-rating for all the upstream and downstream oil companies. I think till the time, of course, one also has to see what are the kind of movement on the crude prices that we see. I think as long as crude stays below $80 a barrel, most of the oil companies would be in a comfortable position. And our in-house call is that probably crude should stay under that level, at least for the remaining 5-6 months of the fiscal. So we would continue to be bullish on that space, and whenever the next leg of reform happens, that would be an opportunity to buy more.
Right. Well, what's your outlook on the realty pack? Slipping once again. We saw some amount of momentum building up there the last couple of sessions, but first one to go when we're seeing profit booking set in.
Well, I think real estate space is definitely one space where one can clearly see value even with markets at 20,000. I think while the physical real estate demand and prices have definitely gone up, I think in Bombay and Delhi, we are now having prices which are above even the peak of 2007, 2008. But I think that hasn't really reflected in the stock prices of most of the companies. I think with the kind of demand coming in Tier 1 cities, including Bombay and Delhi, and of course, Tier 2 cities like Chennai, Hyderabad, Bangalore, I think there's going to be a lot of volume traction coming in. Even if the prices were to stay plus minus 5% or within this band, I would expect a lot of earnings momentum in the next few months. So definitely, we would be positive in the large cap residential real estate names based out of Delhi and Bombay.
You concerned about the spate of IPOs coming out, Varun? 11 or close to 11 this week. Rights issues coming out. Once again, QIP is being spoken about. Reminiscent perhaps of 2007 getting into 2008. Does the pace surprise you a bit?
Well, no, I think a lot of people had been waiting for an opportune time to go in for various IPOs, and I would not compare it to what happened in 2007, 2008. I think that was a very different time and a very different era. But I think yes, the kind of papers that are coming in, there are very few that would probably merit attention. I think the one IPO that we liked, of course, was Career Point in the education space. It's a clear niche story and a lot of growth prospects in the times to come. Other than that, while there are niche stories in alternate energy space, water and environment space and all that, but it's very difficult to find a comfort in the valuations that which most of the issues are coming in. So I think we would give most of these issues a miss at this point of time.
All right, talking about IPOs, let's go across to Diana, who's been... let's switch track once again. Some of the stocks that are moving just ahead of markets closing, and the FMCG heavyweights look like they've recovered some ground as well. Varun, we have seen renewed interest when it comes to the defensives of late. What's your call there?
I think if you look at the large cap FMCG names, I think they are trading close to 25 times FY12 earnings. We don't see a lot of upside from these levels. I think with the kind of price competition that is heating up again in the personal care segment, it's definitely not going to be good news for the bottom lines of most of these companies. I think especially in terms of the niche stories, we see some great growth prospects when terms of when talking about pizza chains or even smaller companies which are into niche personal care or hair care segments. They are all expected to do well, but then one would want to buy them at a particular price, and which I think is quite prohibitive at this point of time. So I think we'll wait for a correction to buy in most of these names.
We were speaking to Abhijit Paul of Bricks a few minutes back. Varun, getting his thoughts technically on IT. Fundamentally, what's the call? You've got next week, exactly a week from now, when Mahindra Satyam will declare its numbers for the first time. Tech Mahindra is up about 9%. Satyam is up about 15%. But that aside, the rupee appreciation seems to be hurting the frontline IT stocks. Your thoughts?
Well, I think if you look at the Tier 1 companies, we would expect at least a 15 to 20% volume growth, which I think is definitely good news considering the kind of environment that most of these companies are trading in. I think the only concern stays is that on the pricing. If you look at most of the Tier 1 companies, they are seeing at least I think 5 to 6 quarters of continuous decline in offshore billing, which is not a healthy sign at all. I think if you combine that with the kind of valuations that most of these companies trading at, one would not get the comfort to buy them at these levels. I think as far as the rupee appreciation story is concerned, we will not really worry about that too much. We are running, I think, a $130 billion of current account deficit. I think with the kind of import growth that we are seeing, that is definitely going to keep any significant rupee appreciation in check. So we are not very concerned about that. But I think what is more concerning is the kind of pricing environment that most of these companies are seeing, and obviously the valuations. So I think it's this time to be cautious on the space at this point of time.
All right, HUL, ITC, SBI, those are some of the heavyweights from where we're seeing some support come into the market and some recovery taking place as well. A few points there, inching back up towards the 6,000 mark on the Nifty. The other gainer today, of course, is Maruti. And when it comes to the auto pack, Varun, particularly the four-wheelers, Maruti, Tata Motors, where would your attention be?
I think the segment that we like more is probably the two-wheeler segment. I think with the kind of numbers that we've seen for the last 3-4 months, you would expect that to continue. Of course, obviously, now with the festival season coming in, the kind of it's traditionally a strong quarter that should continue to reflect in the numbers. I think, and then moving on to December, the traditional wedding season starts in northern India, which should definitely help two-wheeler demand. I think we also like the commercial vehicle segment with the kind of IIP numbers coming in, shows a very robust manufacturing and industrial growth, which should definitely help the commercial vehicle space. I think one space which you would be very cautious at this point of time is the four-wheeler or the passenger car segment. The two reasons: one, I think the kind of valuations most of these stocks are trading at leaves very little scope for upside. And then I think second is most of these companies are kind of hitting the capacity constraints. So I am very concerned as to where the next round of volume growth is going to come in. All the people have announced expansion plans, but I think that is going to take some time coming in, as most of the manufacturers have been taken in by surprise with the pace at which the demand has come in. So I think that is one segment which probably one needs to be a little cautious, but we continue to be positive on the two-wheeler and the commercial vehicle space.
Good speaking with you as always, Varun. Appreciate your time. Thanks so much for joining in. Varun Goel there from KC Securities. Let's wind down the markets then. 5983.50 on the Nifty right now. We're still off substantially from the day's high on the index by about 55 points. On the Nifty from the day's low, we're off about nearly 40 odd points.